Today, we are starting our support and resistance bootcamp. Support and resistance, hands down one of the most important topics in stock trading. If you do not know support and resistance, you will not know where to enter and where to exit a stock. That's what support and resistance is all about. Support and resistance is going to show you when stocks are going to reverse. It's going to show us when buying volume is going to move in, when shorting volume is going to move in, when profit taking is going to happen. And if we can see all of that and be aware that all of this is going to happen, well, then we're going to be able to profit. Support and resistance is hands down one of the most important and the key fundamentals to be able to have success in the stock market. So let's dive right in on it. Let's understand it and figure out what support and resistance truly is. So this picture right here, I know I always like to make things simple and easy, but this is support and resistance. And resistance is just going to be the red line at the top. Support is going to be the green line at the bottom. And what this is the stock is in the middle. The stock is what's going up and down, back and forth, up and down, back and forth. And simply enough, if we could see this inside of a chart, this makes our lives very easy. Because let's say this is the price of $5, and let's say this is the price of $6. Well, if we can see where support and resistance happens, couldn't we just consistently say to ourselves, all right, I'm going to buy at $5. And as the stock spikes up towards $6, I'm going to sell or maybe even look to short a stock. And as the stock starts falling back on down, guess what you do? You can cover your shares and get out because you know the stock's going to bounce at $5. And you can go ahead and bounce it at $5. And the stock goes all the way back on up and you say to yourself, all right, I'm going to get out right here and I'm going to look to short it. So, I mean, just already, we could see the power behind support and resistance and how important it is. If you can figure out support, you are always going to know the best dip buy. And if you can figure out resistance, you're always going to know the best area to lock in profits or look for a short if you are a shorter. And that's why it is so important to us. Now, let's start with support and let's break down what support truly means, how it's going to be helpful for us. So what we have here is the support level is the level at which buyers tend to purchase to enter a stock, which means the more people purchasing it, the better chance the stock has of going up. It refers to the stock share price that a company rarely goes below. Support levels in stocks can be created by limit orders or simply the market action of traders and investors. So let me ask you guys a question. Why do stocks move up? People buy them. Why do stocks move down? People sell them. So if we can see an area where consistently people start buying plays and we can look at that through the past chart history pattern, we're going to be able to figure out areas in the future that most likely the stock is going to keep moving itself back on up. We need to remember a lot of stock trading is based off psychology, which means if we see a stock bounce off $1 3 months ago, and we saw it bounce off $1 2 months ago, and we saw it bounce off $1 last month, and now the stock is coming back down to $1, don't we believe that that's most likely going to be a great area? And why do we believe that? Because it's happened in the past. And if I set a limit order at $1 and you set a limit order at $1 and Ashley and Brian and Matthew and Vincent and Billy and they all set limit orders at $1, wouldn't $1 hold up as an area where the stock most likely would be moving back up? It makes sense, right? That's where everyone's getting involved in the play. So it comes down to if we can look at the past chart history and we can see where support is on the past, that's where we can consistently be able to make money in a very profitable area. Let's remember here, team, when we're stock trading, we're not gambling. We're not picking random areas. We're looking for the most consistent areas that we're going to be profitable. If you ever want to compare the stock market to a casino, you're the house, not the tourist. The odds have to be in your favor. And that's one of the craziest things about it, team. When people say, oh, hey, stock trading is a gamble. You could be, you could be the best gambler in the world. Best gambler in the world. And when you walk into a casino, the house still has the odds above you. As a normal, let's say, tourist gambler, you may win 45% of the time, and the house wins 55% of the time. Well, guess what? In stock trading, you could be the worst stock trader in the world. You already have a 50-50. You could study a little bit, do a little bit of education, paper trade a little bit, and now you go to a 55-45. Now, again, you really start taking it serious. You're on Tradecaster.com with me every single day. We're working with each other. Where, again, you are going into the video library, watching an hour of lessons a night. Well, now you have a 60-40. Now, again, you've been doing this for an entire year. Now you're at a 65-35. Now, of course, you do more advanced classes and you guys learn and you guys go full time. Well, now, again, you're 70-30. Well, the thing is, I've been doing this for 8.5 years now. My win rate in 2021 on how I was able to make $555,000 is at an 81% win rate. So is this a casino? This isn't a casino. And if you want to compare it to a casino, then I'm the house. I'm the one sitting on top looking down on all the cameras, not the person, again, throwing my money out there. And support and resistance is the number one way on how to become that house. So support level is at which demand is strong enough to stop the stock from falling any farther. In the image, of course, that we can see right here, we can see where that support level is. We can see that at this mark right here, we see the stock start moving itself back on up. Now, why will this mark happen? How does support happen along these lines? There's 3 different areas of support. It's going to be called natural support, past chart history support, and detailed support. And that's going to be our key areas on where and how we know the stock is going to come back on up. We're going to dive into those in a little bit. But let's keep going on through this. And as you guys can see, in simple terms, support is just going to be the area where a stock is going to bounce at. Psychologically, or because of chart technical analysis, we can see that that area is going to have more buyers and sellers, and that means the stock is going to increase in price. Now, as you guys can imagine, resistance is going to be the exact opposite of support. Support is the floor where the stock bounces off of. Resistance is going to be the ceiling or the roof where the stock turns back on down. A resistance level is a stock price that the share value has touched but not has been able to move through on the upside. The resistance level is a horizontal line at the top of the share price, and of course this price cannot be exceeded for some sort of time period. Now, this is the same exact concept as we talked about over with support. If a stock spikes up to $5 last month and drops on down, and last week it spiked up to $5 and dropped on down, this week when it spikes up towards $5, we can assume it's probably a great short area. And as we already talked about, this is how channels start forming. So imagine if every single time the stock comes up to $5, we go ahead and we bet against the stock. We bet that the stock is going to fall. That's called shorting. And I can go ahead and I can short a stock betting it's going to fall. Don't you guys believe, and very predictable, that if you short the stock here, you have a great chance of winning? Or if you have to short the stock here, or if you short the stock here, or if you short the stock here, you have a great chance of winning? Just like if you bought the stock here, or bought the stock here, or bought the stock here, or bought the stock here, every single time the stock has moved on up because we know we have a great chance of winning. So now you guys are understanding the concept of the power of support and resistance. But can we get a little bit more detail? Can you show us actually how to find it? I understand what it means, but when I look at a chart, things become a little bit wonky to me. And that's no problem whatsoever. We're all going to get there. We just don't want to rush through and get past any sort of very important fundamentals. Because right now, that's all we're doing. We're building up this huge skyscraper of success. We're building up your building, right? And we can't build a building if we're just going straight to the penthouse. We have to put in the floor. We have to put in the fundamentals. And again, from the floor, from that foundation, we only can build up. So support and resistance, we got to talk about the basics, but we're going to get into the advanced stuff coming on up here. So again, resistance. Resistance level is which the supply is strong enough to stop the stock from moving up any higher. And as we talked about, past chart history pattern is a great way to see this. We also know psychology is going to be able to be a massive factor. Not only when I look at a chart in the past, if I see it couldn't break a certain level, not only am I more willing to sell at that level, but of course I know other people are going to be willing to sell at that level, which is actually going to lead to the stock dropping. And that's kind of the crazy thing about stock trading. You know, if enough people believe it's going to happen, it does happen. If enough people believe that this stock is going to break resistance and have a breakout, well, that means I'll buy it because I believe it's going to happen. And Billy's going to buy it, and Vin's going to buy it, and Shannon's going to buy it, and Ashley's going to buy it. And so many people end up buying it that it actually does go on a breakout, or it does bounce, or it does sell on off. So part of stock trading not only is looking at a chart, but it's also understanding what everyone else in the entire stock market's doing. And this is where psychology comes in play. You should sit down every single day and not say, what is the best play today? What do I like to play? It's what is everyone else playing? Because what everyone else is playing is what actually leads to stocks spiking in the stock market. So here's our typical support and resistance that we've been reviewing. But let's change this a little bit. Support and resistance could also be on an uptrend. So a lot of times we may look at a chart where we have our top resistance going across the board and we have our bottom support going across the bottom here. But we could also connect the dots and say, all right, we still have the same exact concept, but it's just on a channel now. And this uptrend is just where we have our bottom support and our top resistance. Nothing changes about this. Nothing changes at all. I could still go ahead and every single time it comes down to support, I put an entry here, I put an entry here, I put an entry here. And as you guys can see, every time I go ahead and put an entry near these bottoms, the stock does move itself on up. Same exact thing before. If I want to sell and look for a short, I can do so. If I want to sell and short, I could do so. And if I want to sell and short, I can do so. But the best thing going about this play is overall, it is uptrending. And since it's overall uptrending, it is giving me an idea that there are more buyers than sellers. So whenever you see an uptrend, you know that you have a better chance buying the stock and making money rather than shorting it. So don't go against the grain in most cases. Now, let's go to the next step of this. And the next step of it is understanding that old resistance now turns into new support. So let's break this on down. We have a chart right here where a stock has $4 as our main support. Then we have $5 as our top resistance. We have $6 up here, and we're going to have $6.50 all the way up here. Okay, so let's talk about this chart. What can we see here out of this chart? Well, we know that the stock runs on up and it hits $5. When this stock hits $5, the stock has resistance and starts dropping on down. The stock again comes back up to $5. It hits resistance, it starts falling back on down. We know every time we come back down to $4, we have a great support line, right? $4 has been holding up as a great support line. And when it comes to support and resistance, you only need the stock to usually hit once to understand where resistance is at. For instance, if the stock spiked up to $5 and started falling on down, I wouldn't know the first time the stock comes up to $5 that that's going to hold up as resistance. But now it is set as a resistance. When it comes back up to resistance, I know now I can go ahead and short it. Same thing when the stock comes down to $4. I may not know in the moment that $4 is support, but I can always get it on the second time or possibly the third time if it comes back on down. But the first touch always establishes support and resistance. Now, as the stock comes back on up, notice what happens. We don't get stuck at $5. We actually break through $5. And breaking through $5 and breaking through resistance is another great entry point. So where we always were entering before was always at bottom support, and where we're always selling is at top resistance. But once you break resistance is where you actually have the next leg on up. And that's what everyone's always searching for, the breakout. And that's again happening when you break a resistance line, which has a lot of psychological value, where we say to ourselves, oh man, we can't break $5. Oh man, we can't break $5. Hey, we just broke $5. Everyone, let's go buy it. And the stock runs on up and sets itself up in the same exact pattern, sets itself up in the same setup where, guess what? We hit $6. Then we fall back on down. Now, this is where we want to see something very interesting. And what happens here, team? Well, after we run and we hit $6 and we form our new resistance line, the stock starts falling. Now, is $4 still support? $4 is a support line, don't get me wrong. But we have our old resistance. The old resistance line now turns into new support. So this old, I would say ceiling, this old resistance where the stock couldn't break up before is actually now holding up as our next dip buy. And that's again a very important concept, because sometimes you may be looking for support and you can't find where the stock has bounced off in the past. So one of the best things to do is look at where did the stock get rejected in the past. Old rejection is going to hold up as the new floor. And as you guys can see over here, the same exact concept happened. You know, we hit resistance, we fell. We hit resistance, we fell. We break through resistance, run up to a new resistance line. Where are we going to get our bounce play? At, again, the old area of resistance. That's our new floor. And that's how stocks a lot of times consistently move themselves on up, where we're breaking through old resistance and bouncing at the last level. So support and resistance, as you guys can already tell, they go hand in hand. Once resistance breaks this line, it turns into support. Once support cracks, it goes back into resistance. So every single time we break resistance, it's now support. And every time we move on down, that old support is going to hold up as our new resistance line. So where can we really see this? Well, we just showed you an example of a stock breaking out and now again turning resistance into support. This is again a real example of a chart, BNI, where the stock bounced off of around $73, came back up, bounced off 73, came back up, bounced off 73, came on up, went on a spike, But guess what happens? We have bounce play, we have bounce play, we have bounce play, we have bounce play. Once we crack our support line, now we're holding up as resistance. So before we were, again, dip buying, dip buying, dip buying, dip buying. And now guess what happens if we start coming up to this area? Yep, we're selling and we're shorting because we know this stock is most likely going to be crashing and coming back on down. And this is where now we're starting to understand our entries and exits. We understand that we want to try to get in as close as we can to support. We want to get out or short a stock as close as we can to resistance. Let me ask you something. Are you the type of trader that just seems like you're always getting in at the wrong area? Does it seem like every time you get in on a stock, it starts falling on down? I feel like I'm doing an infomercial right now, right? Are you the type of trader that always loses on every single stock? You see, again, traders making massive gains on StockTwits, Reddit, and Twitter, and you just seem like you can't get a part of it. Well, let me introduce to you support and resistance. So, I mean, that's kind of where we're at right here. And the reason why you keep getting in at the worst area where it seems like someone's chasing you and someone's watching you and someone's turning the stock every single time that you get involved in it is because you are waiting for visual confirmation. You wait for an entire stock to spike on up and you say, yes, I feel good. The stock is moving on up. I'm going to go ahead and I'm going to buy it right now. But the thing is, you're buying right next to resistance. So guess what happens? The stock falls on down. And you say, oh man, that's not good. So all of a sudden, guess what happens now? Well, now the stock's coming back on up. And you say, man, if I just kept holding the stock, I would have made money. You let me, again, jump back in on it. So you jump back in on it. Right as, again, it's right next to its high of the day where you just lost that. But you say, oh, no, it's back on up now. It's spiking. And guess what happens? Now the stock falls on down. And you're like, what is going on? Every time I get involved in a play, it seems like I lose it. Okay, the stock is crashing. The stock is done with. I'm over the stock. This stock stinks. And then guess what happens? The stock starts moving its way on up and you say, oh my goodness, don't touch it, don't touch it. Oh, it's hitting a new high. The stock is going. I knew this was going to happen. I should have just kept holding it. And then guess what happens? You buy again and you fall into the same trap. You fall into the same routine. And what's the routine happening right here, team? The routine is you're always waiting for the stock to spike before you feel comfortable enough to buy into it. As a new trader, you need to reverse that. You need to get out of that rookie habit where it feels like, okay, I'm only going to buy stocks that spike on up. Because if you wait for a spike to happen, it's already too late. Okay? You can't, again, get in on something after it already happens. It would be like the analogy I like to give. Imagine if you're scared to go on an airplane and they say, well, the airplane's leaving. You need to get in on the airplane before it lands in Florida because you got to be in on that airplane to get to Florida. What if you say, no, just go without me. I just want to make sure, again, it is going to work out. The plane lands in Florida and you say, okay, perfect. Let's go. I know it works. Well, the plane's already in Florida. You missed the plane. Same exact thing with this concept. If you're scared, again, to trade stocks and you're scared to lose money and you're saying to yourself, okay, I want to wait for it to go all the way on up and then I'll buy it. Well, now you're buying it at the top. The play's gone. It already happened. So you're just, again, keep wasting money doing the same thing over and over again. And this is where support comes into play because we know we short at resistance and then we buy back down near support. And we short at resistance and we buy back down near support. And we short at resistance and we buy back down near support. Now, something you may realize right away is that once we have support and resistance established, okay, once we have a support and resistance established, we are only ever getting in around these areas. For now on, you are going to avoid anywhere in the middle of the chart. Okay? So let me just grab this. We are only getting in at certain different areas. We are getting in near the very bottom, and we are getting in, or again, shorting next to the very top. And let me just adjust this. All right, awesome. So we want to get in at the very bottom, or we want to get in at the very top. The last thing we ever want to do, team, is get caught up in all this madness. Look at this. Stock goes up, stock goes down, stock goes up, stock goes down, stock goes up. Then again, we start dropping on down. We move sideways, we move on up. We drop on down, we move on up, we drop on down. Now we're in our heads. We don't know which way the stock's going to be going. We drop on down, we move on up, we drop on down. Stock is going on up. We are avoiding all of this absolute madness. We do not get in on there because that's where you are now the tourist. That's not where you're the house. That's not where you have the odds in your favor. You have the odds in your favor when you know if you short a play or take profits In this area, you have a great chance of winning. You are now again saying to yourself, all right, hey, if I buy it play, if I dip buy it down in this area, I know I'm going to win. So the thing is, team, we know we can make money when the stock is down low. We know we can make money when the stock is up high, but we cannot make money when the stock is just going right in random places in the middle. We only can, again, get in your support or resistance. Now, as we already talked about, where's our next entry if we wanted to look for a stock to go on up? We would look for our next entry at the break of resistance. Breaking resistance. This red box is where, of course, the stock continues to move itself on up. And then from there, our old resistance line, guess what? Holds up as new support. So now again, we're starting to not only understand resistance and support, but we're understanding entries and exits and how, of course, we can do this. So it really comes down to support and resistance. Support turns into resistance if it cracks, or again, resistance turns into support if we break above it. Here's another example just to be able to get that concept. But let's start understanding a little bit more on the different types of support and resistance. And these are, again, some different types that I've came up with to really just be able to understand them. So if you actually type in, detailed or natural, past chart history pattern on Google or anything, nothing's going to come up. These are just from my teachings. So what we have here is our 3 types of support and resistance, okay? And they're going to go hand in hand. So let's break each one of these down. Let's see, again, out of the charts today. And the thing is, I don't put any sort of examples in the PowerPoint. I like to look at the charts today. That's how confident I am that we're going to be able to see natural, past chart history, and detailed, because they follow the same exact strategies every single day. So the first type of support and resistance is going to be every 25 cents in the stock market. We're talking about micro caps. We can also talk about blue chips if we would like to, but those are going to be bigger than every 25 cents. When we're talking about penny stocks, we're talking about $1, $1.25, $1.50, $1.75, $2, $2.25, $2.50, $2.75, $3, $3.25, $3.50, $3.75, $4, all the way on up. Now the dollar marks and the 50-cent marks are going to be the strongest. $1.50, $2, $2.50, $3, $3.50, $4, $4.50, $5, so on and so forth. So $1, $5, and $10 are going to be the strongest support and resistance lines. These are going to be, again, very tough psychologically. Whenever you come up from a 99 cents to $1 per share, it's very difficult to break that ceiling. And it's only a penny, right? That's all it is. It's only a penny. But the thing is, it's very tough psychologically to break through that area. Traders are saying we're going from a penny stock to now $1 per share. Just like when we go from $9.99 to $10 per share, we're going from single digits to double digits. So let's look at, maybe some plays from today. All right, let's look at some plays on today and understand support and resistance. So far today, again, I've been able to make $8,493 just by, again, trading support and resistance. And let's take a look over on DWAC. DWAC right here, team, this has been my biggest win so far today, okay? $8,172. Now, when we go ahead and we take a look over on DWAC, what can we see, right? We can already tell, look at the example we have right here and think about the examples we were showing before in the textbook. Can everyone clearly see where support and resistance at? Can everyone clearly see right here on how we can go ahead and make money? Okay, let's short right here. Let's short right here. Let's short right here. And of course, where's another entry? We can look for an entry when the stock breaks this, area right here. Just like we could have gotten in on a dip buy right here. We noticed a little bit of higher lows and you could have made some money. You could, again, make money on a dip buy here and a dip buy here and a dip buy here and a dip buy here. You can get an entry in right here. Or, of course, you can go ahead and short the stocks here, short the stocks here, short the stocks here. You could, again, short it when it comes up here. And then, of course, the stock has been falling on down. But look how crazy this is. What we just showed from the textbook is happening right now. These aren't rare patterns. They happen every single day. And that's how we're able to consistently make money. But what I want you guys to notice about DWAC is DWAC, Deck, we're talking about natural support. We're talking about natural resistance. Okay, why, we talked about dollars and every 50 cents. Let's just take a look at DWAC. Does anyone notice something? Look at the low of the day. The low of the day is exactly at $77.50. And that's because that's natural support. And look at the high of the day, $91.4965. Round up, 0.0045% or 45 right here. That's going to be $91.50. Natural support, natural resistance. right? So that's, again, very important. Well, when you get to plays that are very big, such as, let's go with Tesla, notice again, what's Tesla's low of the day? 99 or 995 and 50 cents. What's the high of the day? 1,054 and 66.99. Let's just round up to 1,055, right? So you can see how these support and resistance lines, they seem like they always just fall on that perfect number. They seem like they always, again, shoot on up and go right up towards that perfect number. And that's when these stocks start dropping on down. Take a look at, look at this. Where do you think we have a lot of resistance over on VVOS? Doesn't it look like VVOS has a lot of resistance right at 250, 250, 250, 250? So we can tell that this stock obviously has trouble right around 250, right? And we could see, where is this stock, getting its nice bounce play at? We have old resistance at $2, comes back down, spikes back up to $2, comes back on down, spikes all the way on up, bounces right off that $2 mark. So we can see how great $2 has been. $2, an extremely strong area where you guys can go ahead and be able to make a lot of money bouncing off support. So just like this, you guys are now understanding how natural support works and how you guys can make money through, again, natural support and natural resistance. What else do we have here? Past chart history pattern, previous spiking highs, previous bounce areas, right? So this is when we look at the past and we say to ourselves, all right, the past can definitely help us understand the future, right? The past can help us understand what's going to happen. And, a great example is just DWAC once again. This is DWAC's chart today. And of course, this is DWAC's chart from yesterday. So the past is helping us understand where this play could be going. If we just want to stick with the DWAC, and then we can also go with Tesla, which is, again, the current stocks that we're watching, we can also, again, get a great idea on where this stock may move up at. Can you guys tell me where, again, Tesla may get a nice little bounce play? Well, does anyone see that Tesla bounced right here, and Tesla bounced right here, and Tesla bounced right here, and Tesla bounced right here? So if we go ahead and we say to ourselves, hey, every time it seems like it comes back on down towards around like this 980-ish mark, it seems like Tesla gets a perfect bounce play. Bounce play, bounce play, bounce play, went a little bit lower, but then we got a bounce play. It wouldn't be a bad idea to probably look at around that 975, 980 mark. It seems like that is the best overall area to go ahead and make some cash, and best overall area to go ahead and get some money. So looking at past chart history can definitely help you guys understand where this stock can go up towards. So let's take a look over on IMMX. IMMX, this stock, spiked on up towards around that $8 mark, came down, spiked on up towards $8, came on down, spiked up towards $8. Let's change the time frame a little bit to get a better understanding of it. Let's go back to a 30-minute time frame. Take a look on IMMX. Every time it seems like we come up towards around $8, doesn't the stock get weaker? So that is giving us a great indication that, hey, these plays are getting weaker every time it comes up towards $8. This is now telling us we probably want to short there, and we probably want to take our profits around those marks. And that's the beautiful thing about past chart history pattern, right? Past chart history is going to be great because it's going to give us an idea and an understanding on where we should be, again, selling, or where we should go ahead and be shorting. Last but not least, we do have detailed. Okay, detailed is going to be anything from indicators being touched, 52-week highs, 52-week lows, previous highs, previous lows, opens, everything along those lines. So I do have to refresh again my scanners to get all the indicators up on this. So let me just refresh this right here. And a lot of times, guys, when we go through, we are going to notice right away that a lot of certain indicators are going to hold up as support and resistance. First stock I picked right here, guess what happened today? This is VVOS, one that we've been talking about a little bit. Notice what happened on VVOS today. It spiked on up, it hit the 50-day moving average, which is this blue line, and it came back on down. And look what it did last time. Hit the 50-day moving average, and 50-day moving average, and 50-day moving average. And you could see a lot of these plays, when they run up to their indicators, they usually have trouble. Take a look at PIXY. Spike up to 200-day moving average, fall back down to the 50-day and 13 EMA, which is right next to $1, which spikes its way back on up and is now trying to have some trouble right around the 200-day moving average. So you can see, again, a lot of these plays, team, usually end up getting awesome, again, either bounce plays or, usually has awesome areas of success whenever you guys notice that these plays have these indicators. Tesla, bounce play off again, the 200-day, 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 which is this red line. Take a look at, one that everyone knows, GameStop, right? GameStop bounced off the 200-day moving average, but then once it cracked underneath the 200-day moving average, it's now going to be holding up as resistance. So, I mean, it's so cool how you guys can also throw all of these together, right? You guys can understand this and start saying to yourself, wow, you know, we have natural support, we have past chart history support, we have detailed support, and we also have natural resistance, past chart history resistance, and detailed resistance. And just these resistance lines are now telling me where I can buy and where I can sell. Now, as I said, don't get impatient. Don't get impatient. And the reason what I mean by don't get impatient is don't be buying in the middle of those channels, of those support and resistance lines. Remember, from now on, we only enter near support and we only enter near resistance. That's, again, something that's extremely important. Where would we enter on resistance? For shorts or for breakouts. Where are we entering on support? For dip buys, right? So that's what it comes down to, team, right? Master support and resistance. Once you master support and resistance in stock trading is going to be simplified, right? Buy in the dips, short at the highs. I really wanted to break down this lesson with you guys. I really wanted to make sure that every single trader understood how to make money in the stock market. And that's how, remember team, I am not doing any sort of mathematical equations. I made $8,493 today just from understanding where support and resistance was. There's a reason why I traded DWAC today, because DWAC shows me the most predictability. Since I have so much predictability and I can clearly see where support and resistance is at, I'm easily able to go ahead and make a profit. And as long as you follow these guidelines, as long as you keep saying to yourself, be the house, not the tourist, you know you're going to be able to make some great profit over on these plays. So great job, great work. Keep crushing it, ladies and gentlemen. And I'm so happy that you guys were able to learn this lesson, support and resistance, and take it over to your live trading so you guys can be able to join this big money club. Can't wait to see you guys profit. If you have any questions, please let me know. Woo! Baby, oh baby. All right, team.